Here we have the 4-hour price chart for CHEWY Incorporated, stock ticker CHWY. As we can see here, the stock is really starting to find a base at the price level that we have outlined in prior videos. Um, if we're looking at the stock's, slightly longer term history here, we can see that there was a lot of very strange, volatile trading activity that went on here. In my view, this is probably happening because, the stock is sort of entering into meme stock status. Uh, and, that can have pros and cons, positives and negatives. Um, it doesn't really affect the fundamentals of the company very much, but it can lead to some very erratic and volatile and unpredictable trading activity. And we can clearly see that as being present here in this chart. Um, if we go back to the June 27 trading session, we can see that the stock posted highs above $39 per share, but then quite quickly reversed most of those gains. And then, started to form a base here. But if we look at the YouTube community here as a whole, I think that some people have stopped, discussing this stock or stopped recommending this stock. And that probably has a lot to do with the fact that many people might have been sort of attracted into these positions at these highs. And then prices start to reverse lower quite quickly. And then it becomes much more difficult for these YouTubers to kind of explain themselves, out of these positions. Why were they so wrong? You told me this was ready to explode. I bought in at $39 per share, and it's only gone down since then. That happened a lot with GameStop. Roaring Kitty, he basically ran away from the market for years because that was the type of situation that occurred with him. But as we see here, if we just kind of take a step back here and wait for the dust to settle, and take a more kind of prudent, kind of rational approach to trading these things and do a little bit of the chart work, we can see that it does become easier to start to identify potential support levels that can be used for real trading positions that actually do make money. So we can see that happening here. After this price spike, we were kind of looking at this 618 retracement. The 61.8% Fibonacci retracement, in my view, is the most important Fibonacci retracement. It's what most of the Fibonacci sequence is actually based on. This 50% retracement here, that's not even a Fibonacci number. It's included in a lot of these price charts, but it's not even part of the Fibonacci sequence. So it's kind of stupid that it's even there. But just about every charting application will have this plotted with the Fibonacci retracement areas or zones. But the 618 retracement, for people that understand Fibonacci analysis, this is probably the most important Fibonacci level. And you can see here, this is exactly where prices started to base themselves and turn around and move higher. This is what we were waiting for. We were waiting for the dust to settle here. We were waiting for all the meme nonsense to kind of run its course, and then look to identify some important support levels that can be used for real trades that actually make money. So, while the rest of the market, or at least the YouTube community, seems to be losing a bit of interest in this stock, we can see that, our positions here are actually starting to accumulate profits and returns. So this is how you actually trade the market. You don't get in when all the hype is going on. That's the easiest way of losing money. How easy would it have been, to buy in at $35 or $39 per share, and then prices just quickly retrace themselves, and then now you're doing nothing but losing money, even though the broader trend here is still up. I mean, that's extremely frustrating. That's an extremely frustrating situation. And we've all been there, right? In situations where, somehow you're in a long position, the stock mostly is moving higher, but somehow you're still losing money. And that all has to do with entry points and where you're getting into the market exactly. The stock is a really good example of that. Because it would be so easy to have gotten in at the wrong levels here. And now here you're stuck long at $36 per share or something like that, and somehow you're still losing money, even though the movements are ultimately higher. So currently, what I'm looking at, kind of trying to go a bit longer term here. The spike highs here did come in just above $31 per share. But this was an extremely volatile and erratic price move. And I think that what the market was really looking at here would have been these highs back from June 23rd, June 2023, uh, which posted just above $40 per share. I mean, we're roughly in the same area here, but the market was just so volatile and erratic, and so many of these positions were just not, firmly based in anything. I mean, a lot of these people were just getting in and out very quickly, um, and that's a recipe for failure very, very quickly. So, I think what the market was trying to go for here was this 40.77 high. So ultimately, this is the initial price target for these positions. Currently, we're trading just above 27.80, which is good because as you can see here, we are clearly forming a base at this support zone. This is the level that we were watching. We're also bouncing a bit off of this 50-period exponential moving average. All of the moving averages are rising. I mean, they're sloping in the upward direction. And then in addition to that, you do have this indicator reading here, which is sloping higher and suggesting that positive momentum is still present in the market. So we're not overbought here. We did reach overbought territory during this strange spike high that happened. So this would be roughly June 26, June 27. We did reach overbought territory there. It's not surprising at all that would happen. I mean, just look how strange this candle is. It doesn't really make a lot of sense when you compare this to the rest of the chart. Um, but we've rolled out of that territory. We're no longer overbought. We're trading at roughly, I want to call this 63, 64 in the relative strength index. So you definitely have room to the top side here to continue moving higher before we start to reach overbought territory. I don't think we can get there in one price movement based on where the relative strength index is. If we were oversold or something like that, then maybe that would be possible. I don't think we're going to get here in one shot. Um, but there is very clearly there is a very clear base that has formed here. And it occurred at some significant price levels. We're bouncing off of the 50-period exponential moving average. That's the orange line. And we did also bounce off of this 61.8% Fibonacci retracement. So, this is a confluence of events, a combination of technical, chart signals that appeared in the same area. And it does look like we're forming a base here in a way that's much more sustainable and solid. I mean, you do not want to be seeing these price spikes. Everybody that watches these, YouTube videos about GameStop and stuff like that, everybody's looking for this massive short squeeze that just kind of instantly occurs out of nowhere, just kind of randomly pops into existence. Um, that it really doesn't work like that, and you don't even want it to work like that because it becomes much more difficult to actually capture gains there. I mean, what happens if you're in a position like that and you don't close the position at the right time? The market starts to reverse very quickly, and then you're kicking yourself because woulda, coulda, shoulda, you didn't close the position at the right time and you didn't actually get all of those gains. That's not what you want to see. What you want to see is a base forming, and a sustained uptrend higher. And we are starting to see that, but how many people actually had an opportunity to capture gains during this June 27th trading spike that moved into $39 per share? If you're somehow able to do that, power to you. Praise the Lord. Praise Jesus. But the vast majority of people are not going to be able to do that. So this is, you need to start, you need to look for more sustainable price reversals when you're going to be trading stocks like this. So here's the current market analysis for CHEWY Incorporated, stock ticker CHWY.